Welcome to another episode of Engineering Money, the podcast where some full-time engineers give their 2 cents on the financial news of the week. My name is Ben, a civil engineer in Washington State.
We also don't know what we're doing, so we're just trying to survive. My name's Tim. I'm a mechanical engineer from Indianapolis.
And I'm Joey, a food products engineer in Minneapolis. This is the best Tim intro we've ever seen.
That's right.
We're also sponsored by Vinovest. They do wine investing. You just go in there, they pick out all the wines, and you hopefully make money. You can drink it if you want. It's pretty neat. So, we have a link in our description. It gives you a discount on their expense ratio fee thing.
Tim, do they have an index fund or just the total wine market?
No. You have to buy individual bottles.
Okay. Because
that'd be cool.
One time you said that wine was going to go up, and so I'm trying to figure out how to determine if that was a good call or not.
I wonder if there is a wine index, though.
There's got to be something, like an alcoholic beverage index.
Yeah.
So today is a little bit of a special episode. We're going to do things a little bit differently. We are doing a year in review. This is the end of the first year that we've been running this podcast, so we're going to take a look back at some of our calls that we made in an earlier episode and see sort of how they stack up, see our best calls and see our worst calls. Mainly it's just to brag that we're not financial advisors, but we at least made a few good calls.
There were at least some.
That's right.
Let me emphasize that we're not financial advisors.
Before we get to that,
but that should not stop you from following our advice.
Yes.
If you so choose.
If we don't mind, I wanted to talk about one cool phenomenon that I discovered the other day, and I wanted to mention briefly and get your guys' thoughts on it.
I guess I'll allow it.
It's called the Santa Claus Rally. All right, so this is some sort of, I guess, trend that was uncovered a long time ago where it's like the last week of December and then the first 2 trading days of January are, historically speaking, they outperform. They're super bullish on those days.
Yeah.
And they call it the Santa Claus Rally.
People are just in the Christmas spirit.
I guess so, but it's interesting that it's after Christmas.
Right. Well, it's the New Year's spirit. New Year's resolution to buy more stocks.
Yeah. It's like after Christmas, you get all your Christmas money from Grandma. You got to go spend it on some stocks.
So that's actually an interesting idea because there's one theory that a lot of the time for institutional investors that do trading for their jobs, they go on vacation this week. And so the market is mostly affected by retail traders,
Mostly retail,
which are also more bullish than institutional guys and gals.
Yeah. And you get holiday bonuses.
That's right.
Maybe.
Right. There's money in the system. But then I wonder, like you mentioned, it's a historical trend. Do you know how far back it goes? And do you know if recently it's followed that trend as much as previous years?
Yes. So I got the stat here. More than 2/3 of the Decembers dating back to the 60s have resulted in positive gains.
Okay.
So Ben, are you guaranteeing that stocks will go up tomorrow?
Well, what I'm
the Ben Striker guarantee.
Here's my guarantee. I am not going to be purchasing anything until January 6th at the very earliest.
By that dip. But
yes.
Ben, I'm specifically interested about the current look on that trend because I know I've heard of the January effect before. It is essentially this. That it was always the first year of the month. More people started putting their money into their stock picks for the year or whatever it was, and stocks went up in January. And
Ah.
since things like auto traders and high frequency trading have been invented, they automatically see that as a market anomaly and sell.
Mm.
And so it's smoothed that out recently. I wonder if the data on this Santa Claus rally shows something similar or
Well,
not.
yeah, I don't know because this year we haven't had it yet. It starts on Monday, is the period. But I think so. If
Yeah.
that theory is correct, which I think partially it is, where it's the institutional investors are off in like Cancun or wherever they go, um, and then
Cabo.
all the little Timmies are on their Robinhood. They got a fresh $100 from Grandma this past week. They're like,
Wow, this is really accurate to me.
I am gonna put it all in XYZ stock, and the amount of retail investors are a lot higher this year, especially with Robinhood
Yeah, true.
and Webull and all those other. So it's a lot more
Right.
accessible to the retail investor. So I think we might see it.
Yeah, I definitely, I think it's worth at least going with Ben's, pause for a bit before you jump in.
Yeah, because
strategy.
for the long-term investor, it doesn't mean very much. It's like if
Yeah.
you, I guess, wanted to try maybe getting into day trading, this would be a safer week, I guess you could say, because the stocks will,
It'd be a
Which we
more
don't
interesting
yeah,
know.
because the
week.
stocks, generally
day trade.
speaking, will be trending up more so than
Or-
other weeks in this month.
Yeah, day trading or swing
Yeah.
trading, because by definition, day trading is you don't hold anything
Right.
overnight.
Mm-hmm.
Ben, I do want to
Yeah.
comment. Cancun, so last decade. Ben.
Oh, sorry.
Come on.
Ben's not in with the
What's the
the
in?
big money vacation scene.
Where's the location now?
Oh, Carmel,
Carmel, Indiana. Wow.
They're so hot right
I
now.
prefer the Bachelor Grotto.
Bachelor Grotto. No one's gonna know what that means, Ben.
Who cares?
on.
All right. Let's get into some saucy stuff here. So,
Year in
review.
review. Let's do some review.
Joe, you should go first. What were your best calls?
All right. Yeah, so specifically, I am proud of the calls when I put a time frame on them. I didn't always, but the ones that I was able to say, hey, I think this stock's going up this week, or this stock's going up Monday. Specifically, the ones I want to look back on are Bloom Energy. Might have remembered me mentioning them a few times. The call that I'm proud of is it was July 12th was the episode date. And I said, Bloom's going up this week. They ended up increasing by 23% that week. So
Wow.
that's a call I'm proud of.
Big
Annualized
brain
return.
Oh yeah, it was that
based on that. Could repeat that every week.
from the
You'd be at
14th to the 15th
1200.
is when it really jumped.
Yeah. So I captured that day in my call for that week, which is, made me feel pretty good. The other one that I think is fun is I didn't put a time frame on this one, but I said buy Bitcoin. I said that on
And-
June 14th,
Which we should mention was during our conspiracy theory episode.
which is exactly why I think it's so fun. That was like the last call of that episode in our conspiracy theory special, the Father's Day special.
Oh yeah, that's
Um,
right.
And so it's up 186% since I said that. My favorite part is the reasoning was essentially because of the Illuminati, buy Bitcoin, it's our only fighting chance.
Wow.
But I do need to mention, because I put way more effort into this than any of those one-off calls, is that stonks matrix that I put
Yes.
together way back early in
I better pull it
our
up.
podcasting days. Yeah, so uh, it's kind of a mess, and it wasn't maintained, shall we say, throughout our entire podcasting
What are you
duration.
talking about?
But
Look at this.
for the first for, for the first 4 weeks that it existed, I was actively maintaining it with a Investopedia stock market simulator account, so that every week I would buy about $100,000 of stocks and short about $100,000 of
Yeah.
stocks. I liked that strategy because it was even there. So I couldn't just rely on a bull market saving me, because I shorted just as much as I bought. I did it for 4 weeks. Specifically, though, I kept in mind the 6 week to 9 month time frame when I was filling out this matrix. So even though I only was buying stuff or shorting it for the first 4 weeks, I think it still applies because it hasn't been a full 9 months since that final trade. So the top performer is far and away what's putting the stonks matrix return at 340% as of today, and that is Tesla, with which the positions I put in Tesla went up by almost $3 million.
Oh my gosh.
With a $127,000 cost basis.
Oh my
and I'm proud of the stonks matrix here for making that play, because, as I mentioned, there's the buying and shorting. It not only called Tesla as a long call, it called it as a pretty big long call. It put $127,000 into it over the 4 weeks, and that's significant considering only a total of $400,000 was put into long positions. So it was very bullish on Tesla, and it paid off. So that's the big one there. Without that position, unfortunately, it would have been at a loss for the total time so far.
So everything else was negative, except for Tesla? Is that what you're saying?
No, not everything else. There were other things that made money, but the big losers outweighed those other things. Specifically, the biggest loser was Virgin Galactic. It shorted that one pretty heavily.
Rip.
So lost $43,000.
Wait, you shorted it?
Yeah. It
well, there's your problem.
Exactly. So the reason it was shorted is its valuation score came in low. It was way overvalued. It wasn't getting talked about on Wall Street Bets. It had no dividend. And Recognia, the technical analysis that I use, its average technical analysis for that time frame was the lowest.
Whoa.
So that was the weakest call of that, but I feel like I can't. I tried to look at it like, oh, what if I took out Tesla? But it's really unfair to the Matrix to do that, because, like I said, it not only picked Tesla, it picked it as a big winner. So if you took that $120,000 should have gone into some other stocks, and I don't have a way of saying where it would have gone.
Yeah.
So
I mean, your Matrix had the balls
That's
to invest in Tesla when everyone else said not to.
That's true, because back then, that was way before its stock split and everything that drove it way up. But I'm proud of this little baby. I might tune it back up for the next year, but that's pretty much what I wanted to talk about for my year in review.
Very cool.
Side note, did my mic get louder? Because I realized I had it backwards.
I don't see any difference on the charts here, on the producer side.
Cool.
Tim,
I'll say
Tim, you should go next.
Okay. So I had some good calls. Well, no, my best one, I didn't even say whether I would do anything about it. I just talked about Neo, and I was like, I'm watching this stock now. And that was a complete lie because I didn't look at it again. But since the moment I mentioned it, it went up 1,000%.
Oh my god.
I mentioned it back in what is that? March?
We started in April.
No, we weren't on it.
Oh, not March. I never learned my months in elementary school. My elementary school teacher failed me.
The end of May, Tim.
May. That's the other M one.
Wow.
Yeah, I mentioned it at the end of May, and it was at $4.
And now it's at $20.
No, isn't it at like?
Oh no, it's 45. Why is it? Oh, because it's not.
It keeps going up.
Yeah, that would have been a
Whoopsies.
10-bagger had I invested in it, and but I completely lied.
So the moral of the story is, don't listen to what Tim thinks about the stock. If he mentions it, buy it.
Nice.
Well, I don't know if that's quite true, Joey. Well, so I also mentioned, I'll keep talking about the ones that
Yeah.
did well. I mentioned Shopify back in April.
And you said it would. You didn't just mention that one.
Yeah, I said it would go up, and I should have followed my own advice and bought it because it went up 100%. It was at like $600, and now it's like $1,200. And then talked about Logitech. That was one of my big calls I was really proud about. It's gone up almost like 82%. I've since gotten out of them because I stopped following them very much. And then another one, well, I also said Apple, which I said Apple at like maybe the perfect time to get into it. But that was just like, oh,
The perfect
Apple
time
stock
to get into
good.
Apple has been every day for the past
Yeah.
decade.
Yeah, it's like that's not even a big call. But another one that I said that I did not follow my own advice in May, I said Chewy.
Yeah.
I said, if my mom uses Chewy, a middle-aged woman, that's the best indicator that the stock is going to go up. Because, like,
Oh
you know,
man.
if middle-aged women can figure it out and use it, then why would it go down?
Yep.
And it went up 150% nearly. I didn't buy any of it because I'm an idiot. But I'm not all good at picking these though, because I also said that GSX, I don't even know what it is. It was just a Chinese stock. I said it was going to go down. It went up 75%. And then my biggest loss of all was I bet against Tesla. I didn't actually bet against them, but I said that they were going to go down. I'm
Back
bad
at
at
the beginning of August, you said that.
Yeah,
Oof.
August. Since I said that they were going to go down, they went up 131%.
Tim, at least you're in good company because Tesla is the most heavily shorted stock there is. So
Yeah. I mean, but my proudest opinion of the year is that Nikola sucks.
Oh yes. Oh my gosh.
which we have heard.
I was waiting for it. I'm like, when are you
many
going to bring
times.
up Nikola?
They, since I first made an opinion of them in June, they've gone down 61%. How they're not at zero still baffles me. But I hope they
Oh
get
my
there one
gosh.
day.
It'll be soon, Tim. Don't you worry.
I sure hope so.
Dang. So I think the moral so far is that we need to trust ourselves more because we made a lot of calls and then we didn't actually act on them
Yeah.
with our own money.
I'm going to look through back this data. Which ones did I actually buy any of?
I'll go through mine here. I made a little chart for it. Just going through, my top 3 calls were Carrier back in April, DraftKings in May, and Unity before its IPO. All of those have more than doubled since that call.
Ben, I'm still mad at you about DraftKings because you mentioned it, and then you didn't mention it after that episode. Even after it started doing well, you just left Joey and I in the dust.
That's right.
You weren't like, "Hey, you guys gotta get it on DraftKings."
No, it's great. And then MTA also, which I shill for almost every week, it has also about or a little more than doubled since I made that call. My worst 3 were Workhorse. They've gone down 12% since I made that call. Nova Gold, which is one of those gold miners, they're down like 17%. And then Intel, which is just stinky poopy.
No, Intel's great.
No, they're bad. But then I also did a quick little thing. If you did like an equal weighting the week that I called them, you'd be almost at 35% if you made all those positive calls.
That's not terrible. Your worst losses aren't really that bad.
Yeah.
It's because I only
I'm gonna-
recommend solid picks, Tim. Now,
Yes,
ooh,
we can say
speaking
that.
of solid picks, I did want to bring up a call that no one has made, that nobody saw, and has been so pushed down. The mainstream media won't even pick it up. Okay?
Classic
I don't even know
mainstream
what
Oh
you're
yeah,
talking
no,
about
I,
right
I
now.
didn't want to tell you guys.
That's the
this
point,
is
Tim.
this is
It's
this
so
is so
underground.
underground, and I'm so mad about it too. Do you guys know what Crocs are? I'm sure you do.
Yeah.
You know Crocs.
They're made in
Of course.
Bosnia.
They are a publicly traded company.
Crocs are...
But not only that,
didn't know that.
not only are they publicly traded, but they were the greatest call post-pandemic that nobody picked up.
I mean, they weren't the greatest. They
They
only went up
were the
6
greatest.
times.
Ooh.
And actually, so
What?
that because like on those days, I saw $4.90 on a chart in March. So that might,
You know what? That makes sense, though, because I've been thinking recently I should get a pair of Crocs.
and yeah, so this is a little bit of a preview, and I didn't want to give it away because I know you guys are going to steal it for your list, but Crocs is already on my
like
list for
Crocs?
2021.
Crocs is going down from here. Put that in the books.
So, I mean, it's just really sad. Everybody should have gotten in on Crocs.
My gosh, yeah.
Clearly.
Well, yeah, that's a good time to bring up. Next week, we will be talking about what our calls for the next year are.
Yes.
And maybe longer term. You don't know.
And I think, yeah, we're each going to bring 10. 10 picks.
10 bullish picks for the year.
Yeah. And I think I'll actually be creating a portfolio out of those picks. I'm thinking I might do $1,000 per person.
Ooh,
Ooh.
nice.
So you guys better pick good
And then
ones.
we also we'll wait till next week, but we got to decide what the loser needs to do at the end of next year. There should be some sort of incentive to be in first
Oh,
place.
yeah.
And if you're on YouTube, you should put that in the comments what you think the loser should have to do.
Oh,
Discuss
The
in the
loser-
Discord.
And discuss in the Discord too, which link in the description as well.
the loser needs to long nickel.
Oh no.
No.
Wow.
Oh my gosh, guys.
Yes.
I forgot one of our calls that is the only thing that I, in my list of data I've been collecting, sifting through the past episodes, I've been keeping track of the calls we're making, and the only one I have that I have listed as all three of us made this call is the high pH index.
Oh yeah, yeah,
Oh,
yeah.
Specifically, Ulta Beauty, Target, Starbucks. We also had Lululemon in there, and American Eagle. American Eagle Outfitters. Real quick, Starbucks, Target, and Ulta are up 39, 58, and 32% respectively
Nice.
since they were mentioned. Then if we take a look at Lululemon, they're up 60%. And let's see, what else did I just say? We had American Eagle,
Yeah.
right? American Eagle are up 116% since they were mentioned.
Nice.
Yeah.
And the last one, oh, I already said Target. Yeah, so
Yeah.
that's all we have in the high pH index right now. Every one of them green, most of them beating the market.
Yep. I believe it.
Yeah, and I guess a caveat. It's important that you mention beating the market because to those that are newer to investing, it's very easy to look like a genius in a bull market.
Yes.
Good point.
So the thing you have to look for is beating the market.
That alpha value.
Yeah, especially like in that sector or just total market. I mean, if you compare anything to the Dow Jones, it's pretty easy to beat that. That thing's
Hey.
stinky.
What about the NASDAQ?
NASDAQ is king.
NASDAQ slaps.
NASDAQ overrated.
I feel like what we need to do, though, if we're looking back at this data, we ought to compare to a total market index.
Pick one. Let's
Because
check it out.
think of all the times you mentioned Tesla before it was in the S&P 500.
Yeah.
Total market ETF. Let's just do like the Vanguard one.
Well,
just check it
Vanguard
out.
makes sense.
Okay, yeah. Just see what it's done from
From the podcast
I guess
starting,
just
I
for-
guess. So
yeah, do that.
it's not looking great for us. So since mid-April, we're looking at 47% up.
Ooh.
Yeah. So any call that we made that was less than 47%, I mean, we didn't do well.
Oh my gosh. Hold on. Let me change my conditional formatting on my data. Yeah. That's higher than I thought for the total
Well,
market.
I mean, and part of that is we started this podcast as a quarantine project at like the bottom.
Yeah, I'm sure if you did year to date.
Year to date is like
year to date
17%,
Yeah.
16.8.
Yeah.
Yeah.
I mean, you can look at it however you want, but either subtract 17, 18% from our numbers or 40, depending on how much you want to trust.
Right.
Or not trust, because you should never trust us, but
But it is a good point that since our first episode aired on April 19th, the things that we mentioned in there are, I mean, we've got Shopify up 100%, Amazon up 33%. Like, yeah, we started this podcast at a good time.
yeah. Yeah, so that is pretty kind to us in that respect. All right. But look forward to next year.
Yes. Next year's going to be awesome.
stuff.
We got some big calls to make next week, so we got to do some research. But yeah, thanks everybody for listening or watching. And we will see you next year.
Oh.
Sleep good.
Sleep good.